So the first one, as Peter mentioned, is the government co-contribution. You can't go wrong. I've got a couple of slides on it, but I won't go into a lot of detail because most people know it. If you earn less than $32,000 or it's slightly less, or if your total income is less than $32,000, and you put $1,000 into your super fund, and the government will match it with $1,000. It's a fantastic way to build for your retirement. And if you look at it, it's 100% return, and you compare that to the average return of the Australian share market over the last 20 years is about 12, depending on which figures you're looking at, 12 to 14%. You get 100% return through the government co-contribution. You do need to be eligible for it. So these are the factors. So you need to make a personal contribution of $1,000. Now, a personal contribution is not salary sacrifice. It's money that you've paid tax on, so it's in your bank account, and then you're putting that money into your super fund as a personal contribution. For Christian super members, it's pretty simple. You can just get a BPay number. I think you can either do that through your online member access, or you can call it the help desk, and they'll give you your specific BPay number to make that contribution to your fund. The limits, so there are, if you earn more than $62,000, your total income is more than $61,920, you're not eligible, so you miss out on this thing. You also need to have generated some income. At least 10% of your income needs to come from either eligible employment, running a business, or a combination of both. And you need to be less than 71 years of age. You can't be a temporary visa holder. And you've got to lodge a tax return each year. So what happens at the end of the financial year? Your super fund gives some information on your contributions to the tax office. The tax office matches your tax return and sees at what your income was, and then determines, well, this is what the contribution should be, or co-contribution should be, and puts it into your account. Do you have to be working to get the co-contribution super payment? Good question, Helen. That's alluded to it. You do need to be generating 10% of your income from either running a business or eligible employment, so some form of employment. One of the effective ways to do it is make sure that you've had some contribution payment into your super, and that assists it. Is there a minimum amount you must earn before you can pay the $1,000? There's not necessarily a minimum amount, but it's that 10% rule, Paul. So 10% of your total income. So if you earned $10,000 in interest income, and you earn that, therefore you would need to generate at least or more than $1,000 in employment or running a business to satisfy the 10% rule and be eligible for the co-contribution. This just shows the benefit of it. So Karen, who's 28, earning $25,000, if she puts $1,000 into a super fund each year, the government will match it with $1,000, and over 10 years at 10% earnings, it's a bit high in today's factors. I guess if it's invested in shares or property, more risky assets, it could do that over 10 years. But she could end up with $32,000 over the 10-year period, and she would have only put in $10,000. So that's with earnings and the co-contribution. Over 20 years, just with the co-contribution, not including the superannuation guarantee, she could end up with $114,000 just by participating in this co-contribution each year. So I guess that shows that the benefits of compounding and combining that with the government co-contribution. There is an optimal amount. If you're earning between the $32,000 and $62,000 amount, there is an optimum amount. So we've got Peter, who's 44. He's self-employed. His salary sacrifices, but it doesn't count towards his co-contribution. There's an optimal amount for him to put into super, and it's actually $600. It's around $600. There's a calculator on my website, which is at cornerstonewealth.com.au/government co-contribution. There's a calculator, so you can put in your total income down here. So it was $44,000 of total income, and do calculate. And so the optimal amount for a person earning $44,000 is just under $600, and they get $600 back. They could put in $1,000, but they're still only going to get $600 back. So it's just the calculator to work out what the optimal amount is if you're earning more than $32,000 but less than $62,000. That's the government co-contribution. Look at that link on the site, because I've got a video that explains a little bit more if you need to go into a little bit more detail. Great question there, Rachel, with are fringe benefits taken into account? In terms of your total income, yes, they are. So if you salary sacrifice some as of the 1st of July 2009, they changed all the rules as in the definition of income. So if you've got fringe benefits, they add on to your total income for the government co-contribution test. So if your fringe benefits, if your income's $30,000 and you've got fringe benefits of $10,000 and your salary sacrifice $10,000, then your total income for the co-contributions test could actually be $50,000. So yeah, they do take that into account in terms of your total income. So yeah, do be a little bit cautious of that.